The relationship between a central bank and the ordinary banks people use is central to how the whole system works. A central bank is, in many ways, the bank for the banks, overseeing and supporting them. Understanding this relationship shows how your money is protected. First, a central bank acts as banker to the commercial banks. Just as you hold an account at a bank, banks hold accounts at the central bank, and they settle payments between one another through it. The central bank sits at the hub of the payment system, allowing money to move smoothly between banks and, ultimately, between people and businesses. Second, central banks often help oversee and regulate banks, whether directly or alongside other authorities. This can involve setting rules that banks must follow. For example, requirements to hold enough capital and cash to be safe, and monitoring their health. The aim is to keep banks sound so they can be trusted with people's money and so the system stays stable. Third, as we have seen, the central bank supports banks in emergencies as the lender of last resort, providing a backstop that keeps the system from collapsing in a panic. Together, these functions make the central bank the anchor of the banking system. For example, behind the scenes, the banks a person uses hold accounts at the central bank, follow its safety rules, and can turn to it in a crisis, all helping keep their deposits and payments secure. Central bank mandates, tools, and targets vary from one country to another, and they change with economic conditions. Even economists disagree about how policy and money creation really work, so check which institution sets the rules where you live. The main lesson is simple. Central banks oversee and support the commercial banks people use, acting as their banker, setting rules, and helping keep them safe, which is how they protect the broader financial system and people's money.